Good afternoon, guys. It's working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And last we spoke, guys, Bitcoin, let me zoom in here. Bitcoin was operating right on top of our $10,650 support, guys. I did tell you that we did have that confirmed break, so I entered into a small position. I also told you I wasn't real confident in that position, guys. We didn't have very much volume. And of course, we had this area right up in here that we were pointing out that looked like it may act as a little bit of resistance, guys. So I wasn't real confident in this position. And I got out a little bit early. In fact, as soon as I saw price coming up here, dipping down a little bit here, guys, as soon as I raised my stop loss to about 10,800, and of course, price very, very quickly just collapsed, and so I ended up getting stopped out in profit. But it's a good example anyway. Even though it didn't quite hit our target of 11,050 up here, it's a good example of how you can play your trade, how you can manage your risk, and still get out in profit. So as price came up here, you just raise your stop loss along with it, and of course, if it drops, it drops. Now, it's interesting that we broke down. Price is now finding support once again on top of 10,650. We wicked below it, but we can see the body is sitting right on top of it. That actually is very, very, very short-term bullish. It does look like it may want to take another crack at coming up at about 10,008, 10,850, somewhere thereabouts. Now, if it comes up and takes out this prior high, which is sitting at about 10,950, if it does take out that prior high with volume, if we break out with volume, and right now, remember, volume right now is sitting very lackluster. We're sitting at about 15.5 billion for the day. That's basically just everybody sitting around waiting for resolution to the overall macro trend or macro consolidation pattern we've been in. But if it does take out now 10,950 again with volume, I do think it very likely takes out 11,050. Now, 11,050 is still a zone to be reckoned with. In other words, it's not completely irrelevant. In fact, if I go swing low, swing high, we can see what? We can see that, of course, price is finding support right on top of the 50. It was resistance acting as support right on top of the 50, which coincides nicely with our $10,650 zone. But the next major fib level is right at the 382, and that's going to be about 11,050-ish. So again, we can see that, just going swing low, swing high here, guys, we can see that, yeah, it does look like we are getting some structure in the market. Excuse me, guys, I had to pause the video there real quick, get a drink of water. So it does look like we are getting some structure in the market, in that look at the overall structure. Price came down, it rejected and reversed it, not rejected, but it found support right on top of the 8865, which we had pointed out before. Of course, then it came back up. It found sometimes people get fib levels confused sometimes. They think as soon as it breaks down below a fib, that fib is no longer relevant. That's just not the case, and we can see it on the way back up here. When price came back up, hitting that golden pocket area, it found all this resistance. Finally, it was able to break up above it, and then what was the next major area it found resistance? Right there at the 50. Now, granted, again, we are looking from a swing low to a swing high, so this is not the traditional way you would look at a Fibonacci level. Nonetheless, it is still finding structures at all those relevant zones. The actual way you'd be looking at this thing would be to go swing high. And my point in pointing all that out is, guys, the 11,500 was sitting right there. I got rid of that a little bit too quickly. Sorry about that. Was sitting right there. 11,500 was sitting right there at the 382. So it would be the next major fib level. So 11,500, if we break above this prior high, the microstructure at 10,950, 11,050. I think I said 11,500. 11,050 will be a relevant zone, is a relevant visual resistance in this case. We'd be looking at it as resistance, and we do have that 382 fib level that it may, again, supporting the fact that it may act as resistance. But that being said, guys, let's look at this from a traditional standpoint as far as fib. So we go from our latest swing high to our swing low, and see if this is also making sense. Let me make sure I'm getting right on that swing high. There we go. We can see that, yeah, it rejected right there, right off the 50. First of all, it found resistance initially right there at the 382. Then we finally broke up above the 382. And of course, where did it just find resistance? It found resistance right there at the 50 and rejected. Where did it find support? Right there at the 382. So we're basically bouncing between the 382 and the 50. Why am I pointing that out? I'm pointing that out because if we do end up breaking above this prior high with volume, in other words, if we break up, if we can get up above 25 billion, anything above that on daily volume, or if we just see a nice little volume surge here with price breaking up here, excuse me, guys, throat is parched. So if we can break up with volume, I do think there's a good chance that we take out 11,500. The next major area, though, would not just initially be 11,500, as I was pointing out there yesterday. And again, yesterday I'm glad I caught this, and I'm glad I didn't leave it hanging there, because yesterday I said if we decisively break above 11,050, we're very likely going to come to 11,500. I don't think it's that simple. We do have, of course, a major area of consolidation that did find resistance. You know, we can see back here basically between August the 10th and August the 13th, found resistance right at there at 11,500. So in the bottom of that zone was finding support right there at about 11,250. That bottom area, that support area of this microstructure right here, coincides very nicely with the golden pocket from this swing high to this swing low area. Of course, the golden pocket being between the 618 and the 65 fib level. Bottom line is, if we do end up breaking above this prior microstructure's high at 10,950 with volume, I do think that we come up, we break 11,050, and we very likely come up to at least 11,250, if not 11,300, which would coincide very nicely with the 618 fib level, or that golden pocket between the 618 and the 65, as well as, of course, what would be a visual area of support, because, or excuse me, resistance, because this was support here. What was support often acts as resistance on the way back up. So we can see it price coming back up, hitting an area of resistance right here as well, and then possibly continuing back down. We'll have to wait and see how price reacts here. But there's no question that we are seeing some structure in this market. We are seeing those fib levels respected. Now, zooming in here on the 4-hour, guys, we are still seeing what looks like a bearish pattern, and it depends on how you draw this. You could still make the case, as we discussed yesterday, you could still make the case that if I go to the bottom of the wick here and just go all the way up, we have a nice little ascending support line that's, you know, has been respected, to be fair, I mean, throughout this whole thing. And so you could easily make a case that we are building a rising wedge here. Volume signature is a little bit off of that, but you could still make a case that we're building a rising wedge here. Not saying that that is what's happening, but as of right now, you could certainly make that case and say you can't rule it out, right? And of course, if that is the case, price may break up here, may find some resistance again, somewhere around 11,050, 11,100-ish, and then we'd be looking at a breakdown to at least about 10,100 to about 9,950, somewhere in this area that we've got marked off right here. This area that we've had marked off for a little bit of time now. Somewhere in here is where we'd look for that target if this is in fact a rising wedge, and if it does break down as a rising wedge. That would be the target, between about 10,150 and about 9,950. Now, as we said yesterday, you could also look at this as a potential rising broadening wedge. And if that's the case, you're looking at something like this. If that's the case, price would very, very likely continue to the upside here, and that's the scenario where we'd be looking for price to possibly top out again, like right around 11,300 to about 11,500. This area right here, based off of this massive this little microstructure back here. Of course, it's also a very, very visual area of resistance that we've had marked off for quite some time, but this would also coincide very, very nicely with this ascending broadening wedge. And of course, if price does reject right there, if it does come up, reject at that area, I would be looking at this as an ascending broadening wedge. And then of course, we'd be looking for a target to break down. That would be a little bit higher. That'd be somewhere around about 10,500 to 10,650, somewhere in that neighborhood. Wouldn't be quite as brutal of a target if in fact that's the case. And again, I'm not saying that is. You could also just say this is just a good old-fashioned bear flag, and there is absolutely nothing wrong with calling it that. And as of right now, the truth is we don't know. But all three of those scenarios at this microstructure would be bearish. Now, again, does that mean that we are absolutely painting one of those bearish scenarios? No. What would invalidate that? What would invalidate either of any of these three scenarios would be a decisive break above 11,500. If we can get a 4-hour open and close, really I'd like to see a daily open and close, but I would even accept a 4-hour open and close above 11,500. I do think that would invalidate this as a bearish pattern, and I do think that we would continue, we'd very, very likely continue higher, at least to 12,000, if not 12,400. Now, we're nowhere near there yet, but that's the area that price does have to get up above to invalidate this, this being some type of a bearish pattern. Now, I'd also be remiss if I didn't point this out, and actually, some of you guys have pointed this out as well. Some of you guys have caught this as well. But we may be potentially painting what looks like, and again, we're not there yet, but what looks like a potential head and shoulders. Okay, so if I look at this down here as the neckline, Okay, we can see that we found support here, and price just wicked down here, found support down here. It's very hard to see probably on your chart, but this little wick right down here on August the 15th would be the start of the right shoulder. And so we'd be looking at something like this. And of course, if that does end up playing out, we would be looking for price to reject somewhere around where it is now, and then eventually break down here, probably move sideways for a little bit longer above 10,650. But when it does break below 10,050 decisively, it should break down on a whole lot of volume. If that does happen, then you know that we're very likely painting this head and shoulders pattern. Measured move off of this, if that is in fact the case, and again, that's a big if, but a measured move off of this, if that is the case, we'd be looking at something like this, which would bring us down to the lower 7,000s. And of course, as you guys know, we've been looking at the lower 7,000s as a potential area of support. We've got this marked off, but we've got many other areas of support that price could find support on in between there. But the measure, if this does end up breaking down on volume and this does end up playing out like a head and shoulders pattern, yes, I would be looking for a mid to lower 7,000 target. That being said, if we do just break down off of this, guys, and we don't break down on a whole lot of volume, I mean, 8,050 to 8,900 is that major target that I've been talking about for a very, very, very long time. And of course, I can't rule out the possibility of a bear trap. What do I mean? Let's clean this chart up a little bit, and let me pull out the Bitstamp, and I'll show you. And of course, I've been talking about this for a while as well. Looking at Bitstamp here, we can see that we're overall macro, well, not macro, but yeah, the overall macro trend here, this consolidation pattern that we've been in since the end of June is basically a series of lower highs, higher lows, basically a symmetrical wedge. Symmetrical wedge has an equal opportunity break to the up or to the downside. I do think that I have a slight bias to the downside for a couple reasons, but let's just talk through them. So this being a symmetrical wedge, if this thing does end up breaking to the downside, guys, how many times have we seen a symmetrical wedge that plays out as either a bull or a bear trap? In other words, price initially breaks up just to find resistance and then completely reverse course and drop back down. Now, the opposite is also true. We've seen price break down numerous times just to find support and completely reverse course and break back to the upside. Now, where would be a logical place for price to find support if it does end up breaking to the downside, and if this is going to be a bear trap? Because, of course, if this thing does break down, people are going to be looking for a measured move, again, at least down to about lower 7,000s, if not much, much lower than that. So, again, you could trap a lot. The market makers are looking at this as certainly potentially an opportunity to trap people into short positions. So how would that look? If it does end up breaking down, well, we know, and we've been talking about for quite some time, this gap, this CME chart, of course, it's almost becoming a cliche here to talk about. The CME chart here at 8,000, between 8,500 and 8,900, this will eventually likely get filled. No, it doesn't have to, but probability says it will likely get filled. If price does end up breaking down here, guys, this would be a very logical area, as we've discussed numerous times, to pick up for price to find some support, and then, of course, bounce back off of and continue back to the upside. At least I'm expecting some type of a bounce off this area. But it's not just because this CME gap, guys. Of course, if this was all it was, I wouldn't be so interested in this area. I have numerous buy orders sitting in this area, not just because of this CME gap, but also, if I pull out here to the monthly, also, if we look at the bear market of 2018, what was the last swing high on the monthly chart? I know I've pointed this out, but I haven't pointed this out in quite a long time. What was the last swing high on the monthly chart? It was this candle right here, the month of July in 2018. This was the last swing high of the bear market before we finally just completely collapsed, broke down below 6,000, that major support at 6,000, and then eventually finding the bottom at around $3,150. So what was that swing high of the last swing high of the bear market? This candle right here, it was at about 8,500. That was the last swing high. So that was the last major resistance before just completely crashing. Why am I pointing that? I'm pointing that out because as we fast forward here into the future, this was the area that price finally was able to break back up above. And initially did what? Initially it found resistance in May of 2019. Found resistance and was rejected where? Right at about 8,500 for the month of May in 2018. And then what was resistance flipped in June. So basically from May to June of 2019, what was resistance flipped to support. And again, where was that? 8,500, and that was, of course, that springboard that took us all the way up to about $14,000. So this was a major area, a major pivot area, and we know Bitcoin likes to retest these major area, these major pivots. And so again, that was 8,500 where that completely flipped. We can also see, if I pull out here to the monthly, and we throw on our moving averages, exponential moving averages, we can see on the monthly chart, where is that 8 period EMA on the monthly? Right now it's about 8,350-ish, somewhere thereabouts, guys. But we know Bitcoin likes to test that. So again, that would bring us back down to about the mid 8,000s. And of course we can see that 8 monthly period EMA is basically what price found support on all throughout the bull market, basically, that started back in 2015. It was just bouncing on the monthly right at that 8 period EMA. So of course I can see it bouncing right on top of that there again. If I switch over here to the weekly, we know that Bitcoin, the 21 period EMA on the weekly, guys, is often tested, and that's sitting at about 8,900, which would be the top of that zone. So you can also see Bitcoin coming down, wicking below that, which would bring us down to about 8,500-ish, and then continue back to the upside. Now, of course, as price continues here, this will continue to tick up here, assuming that price does just move sideways. But I think this is going to end up breaking on the next probably in the next week, if not 2 weeks at the most. We are reaching the apex of that larger wedge that we've been talking about. Let me switch back here. The apex of this larger wedge that we've been talking about right here, guys. We are well within that area that you would start to expect that breakout. And of course, that apex is going to come to a head in the next two and a half weeks, really. But really, this is the area that you would expect you can start looking for a major move. And we are well mature into that that apex area where you would expect a larger move. So we could literally see it almost at any point in time here. But yes, could I see this thing breaking down, hitting about 8,500-ish, give or take, making a complete 180 and reversing course? Yeah, I can see that. I can absolutely see us setting up for a bear trap, because as soon as we break down here, guys, every bear is going to come out of the woodwork. Every bear is going to say this is it, heading down to new lows. And of course, we know if Bitcoin, if anything, Bitcoin is is infamous for fooling the most people, for making the fools out of the most people possible. So of course, making us into a massive bear trap would not be out of the realm of possibility. So let's wait and see how this plays out. But 8,500, of course, as I told you guys, for numerous reasons, is a very, very relevant zone. All right, went off on a little bit more of a tangent than I wanted to on that, but looking at the daily here, guys, looking at the daily RSI, remember I discussed the other day that we were approaching a major area of resistance. This daily RSI, this right around 52.9 to 53, has been a major pivot area. In other words, it's found either support or resistance on the way back up or down numerous times in the past. And of course, as we were climbing up here, I told you guys that we were very likely approaching an area of resistance, and that's exactly what happened. Price did reject right off of that 52.9 area, almost to the tick. So we really need to see price closing above this 52.9, 53 area-ish for me to get bullish again. And until it does do that, guys, again, I do have to favor a slight bias in favor of the bears. Now, looking at the weekly, again, that area right at about 59.2, 53-ish is also the same area on the weekly that's a very, very relevant zone. In other words, that area acted as resistance during the bear market, turned into support all throughout the bull market, and then immediately started acting as resistance again throughout the bear market of 2018. I'm pointing that out because we finally broke back up above it, and we can see that we've still got a lot of room between that and about 52.9 on the weekly. So my point in that is, if we do end up breaking down, we do have a lot of room to drop, and we could still consider this a bullish, healthy consolidation. Or a healthy correction. It's not until we break below 52.9 on the weekly RSI that I start to get very concerned in the macro trend, the overall macro uptrend reversing course and possibly coming back down to newer lows. All right, so let's start with smaller time frames. So let's check our moving averages, exponential moving averages one more time. Looking at the 4-hour, guys, we can see that we're finding support right on top of that 8-period EMA on the 4-hour. We can see that we have now had a confirmed death cross on the 4-hour with on the simple. We've had the 50 simple crossing below the 200 simple, guys. So again, is that an extremely bearish sign? I'm not putting a lot of weight on that, guys, because we've seen that ever since we finally had this golden cross back on August the 7th, of course, that ushered in basically was the top and then ushered in a complete breakdown. So it's been, you know, these things have not recently, with this massive consolidation period that we've been in since the end of June, these things really have not played out the way that they have historically. So I'm not putting a lot of weight into that, but I will just say that since the Golden Cross, historically we have had a death cross followed by a golden cross and then finally eventually breaking to the upside. We have had that happen in the past quite a few times. But again, Bitcoin seems to be breaking on the rules, so I don't really want to put much emphasis on that at all. But you may hear people starting to talk about this death cross on the 4-hour. Yes, it has happened, but I'm really not putting a whole lot of weight on it. It's really not until price breaks down below the 200 simple on the 4-hour that I'm going to start to get very, very concerned on the shorter term time frames. Now let's look at the daily. Looking at the daily, we did close yesterday above the 21-day EMA, guys. But again, it's not until we get a decisive break above the 21-day EMA that I start to get bullish. At least in the short term, bullish here. And right now it seems to be finding support right on top of that 21-day EMA. So I would say if this daily candle does end up closing above the 21-day EMA here, guys, I will say that, yeah, probability will probably favor price coming back up and testing around that anywhere between 11,200 to 11,500, that area that we had discussed earlier. This area right in here, this area that we had discussed earlier, from this little microstructure right here all the way over to this 11,500. So basically from about 11,250 to 11,500, I can certainly see price coming back up and breaking above 11,050, finding resistance somewhere around 11,500 and 11,200. And again, that's if we can close above that 21-day EMA. That would be a decisive break above the 21-day EMA, and I do put a lot of weight on that. As of right now, guys, we can see that the 821 and 55-day EMA are all converging on each other, and we can also see that the daily Bollinger Bands are starting to bottleneck. Typically, whenever you see that, you start to see a larger move. If, as I said yesterday, if this does continue with the bottlenecking Bollinger Bands and the 821 and 55-day EMA all converging, we can look for a much, much, much larger move in the next week or two. For now, how am I playing this? Coming back in here to the 4-hour. For now, guys, to be fair, I did not end up buying this. I wish I should have. I did have the opportunity to, but it was not sitting at my computer at the time. I mean, this gave you the opportunity to, but I was not sitting at my computer at the time, and to be honest, I don't know that I would have. But, you know, if you did get into this position, if you did buy this area of support right back here, I would say just be very, very careful. I would have a very tight stop loss, and I'd probably put that stop loss somewhere around 10,600-ish, somewhere there. Actually, I'd probably put it right below this, probably about 10,560-ish, somewhere thereabouts. Because if we do get a decisive break below 10,650, by decisive I mean a 4-hour open and close below 10,650, I do think it's going to be a quick drop to at least 10,150, if not this $10,000 to $9,950 zone, this area right back in here, guys. To the upside, if we do get a 4-hour opening and closing above 11,050, I do think it continues up to at least 11,250, if not 11,500. This area right here, and that's not much of a trade, but that's kind of the thing I'd be looking for, guys. Remembering that we do have the potential makings of a broadening rising wedge, which would put that target somewhere around 11,500, followed by a massive breakdown. It's not until we get a decisive break above 11,500. By decisive, I would classify that as a 4-hour open and close above 11,500, that I will be looking for a break out of this consolidation pattern to the upside. If we get a 4-hour open and close, really I'd be more comfortable with the daily, but a 4-hour open and close, I'd probably look to front run at least to 12,000 here. But really, we need to see a daily open and close above 11,500 to really confirm that. If that does happen, I will be looking for continuation to the upside. At that point, I will be looking for a move to at least 12,400, and very, very likely a move to break out of this massive consolidation pattern that we've been in since the beginning of July, to break out of this massive wedge. This massive wedge that we've been in since the beginning of July. Excuse me, one second, guys. Now, remember, 11,500, guys, is very significant, not just for the reason that I just pointed out, but also because, remember, I've told you in the past, you know, this 11,500 was the area that we found support before the major breakdown back in 2019 or 2018, the start of the bear market of 2018. That was the last area that we found real support. We found support there for basically 2 to 3 weeks, and then it just collapsed, and then what was support flipped to resistance right at 11,500. I'm pointing that out because, yes, we've broken it by a wick here, but with the body of these candles, we have yet to close a weekly candle above 11,500. Now, again, this is just, I'm mostly looking at this zone. I do realize on Coinbase it closed slightly above 11,500. On some others it was slightly below 11,500. But the bottom line is it's this area, this zone right here. You know, again, it's give or take, you know, $50 depending on the exchange that you're looking at. It's this zone that we need to see the weekly candle closing above. If we can get a weekly candle closing above this zone, I think that does bode very, very, very well for the bulls and the overall macro trend. But until that does happen, guys, you know, the bears do have a case. They do have a case for price topping out here and continuing down and potentially coming back down and testing new lows for 2019. Now, again, I don't think that's a probability right now. I think the overall macro trend is still intact and is going to be intact until we take out about 6,500. I will still be looking for a bounce, but until we do get a weekly candle closing above this major area of resistance, which again is at about 11,500, until that does happen, again, the bears do have a case. Again, that's not my bias, but they do have a case, and I would be remiss if I didn't point it out. And as I pointed out before as well, guys, but just to very quickly recap before we close this thing up, if I go swing high, swing low, we can also see what? We can see that 11,500 almost perfectly overlaps with the 50 fib level, again, from swing high, swing low. We can see that, I mean, just lines up almost perfectly there. So that's exactly where we're finding that massive resistance, right at the 50. So we've got to close above the 50, and coincidentally or not so coincidentally, that wick came up and closed and rejected right inside the golden pocket between the 618 and the 65 fib level. So again, we are seeing some structure in this market, no matter how you look at it. Definitely seeing some structure. Price is respecting these fib levels, guys, and so that tells you that they're important. That tells you that if they are taken out to the upside, that would be very, very, very significant. But until that does happen, guys, again, the bears do have a case for price coming down and creating lower lows. That's not my bias, but it is something, it is a possibility, and it's something that we should be aware of. All right, guys, I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote. If you have enjoyed this content, please remember to like, subscribe, hit that notification bell in the bottom right-hand corner. Until next time, guys, please trade safe. Take care of yourselves. This is Working, signing out.